I mean, there's a lot there with those 6 companies you mentioned. We cover 4 of those companies, and I would argue they all have their own idiosyncratic issues, right? So if you stop and look at Snap, we did a note this week saying they could be running out of money. That's a Snap issue. Twitter, we think costs are ramping into 19. That's their own issue. Facebook's guidance was terrible. People sold it on that news. And now Netflix, which is up 60% still year to date, it's just harder to defend if rates are rising and people are using 10-year DCFs to back into valuation. It's a stock that really works on subscriber growth. We've had a hard time valuing it just because there's no free cash flow, there's very little EBITDA. It's a 10-year view, and as rates start to rise, you have to adjust your 10-year DCF, and I think that's what's happening. So we don't cover the 2 others. Those will be Chinese, definitely influenced. But the 4 you named all have their own idiosyncratic issues that have taken them down.
Yeah, Michael, you just mentioned Netflix. It's down 22% over the past 3 months. It certainly seems that more and more competition coming into the space is playing a role here, too, especially when you look at the losses over the last couple of days. I mean, everybody from, AT&T to Disney. You even have reports that Costco is looking into potentially doing something with a streaming service. How much of a threat is that to that company? And given that, where do you stand on that stock moving forward?
Okay, that's great. Another great question. So we've been neutral on Netflix. This has been the wrong call. Stock's been anything but neutral. But our concern, because we cover some of the names that you mentioned, our concern's always been that margins will never be as buoyant as the bulls think. It's because competition will drive up the cost of content and marketing. And as more people get in that space, people will take back their rights that they've sold to Netflix. And so our view is that Netflix is a great product. It's incredibly well established. But the bulls on that stock have just this fairy tale view of rising pricing, rising margins, lowering marketing spend that in a crowded space just don't hold true. So, we can't, clearly with our neutral, it's not been the right call, but fundamentally what you've talked about with competition to us is the heart of the question. What's the long-term earnings capability of this company and what's being discounted in the stock today? So, that's been the basis for why we're neutral. We understand they're going to beat numbers. We understand that they're the best position. But the stock's up 60% year to date. It's worth at one point more than Comcast and Disney, which just didn't make sense.
They've coexisted with CBS All Access for a while. Disney's obviously coming online. Yesterday at the VF Summit, AT&T rolled out their plans. I mean, at what point does that competition really hit a tipping point?
See, what we thought, Netflix, to their credit, saw this coming. I would say the tipping point actually happened a couple years ago when Netflix started to spend more money on original content, right? So if you think about the sequence, 3 years ago, Fox and Disney started taking content away from Netflix. The fact that Time Warner said yesterday they want to do their own service, and that could be a hit to, licensing fees. To us, the tipping point was a couple years ago, and what happened was Netflix had to double down on content spending and basically had to borrow money to grow their content spending. So to us, what the market's reacting to today is probably a realization that you will have more investment spending and you have less licensed programming. Licensed programming is not why people sign up for Netflix, but it's a cheap filler for consumption, right? So if you like to watch Friends or The Office, well, will those shows exist on Netflix in a couple years' time, or will the owners of those shows take them back, which will force Netflix to spend more money on original content, right? That's my debate. That's what we've been talking about. And I think that's what the market's going to start focusing on is how much margin leverage is there in this model and how much pricing leverage is there if Apple is doing a free service and Time Warner is bundling with HBO and Disney's out there. So I think you've got it, but to me the tipping point was just a couple of years ago because that's when everyone realized that they were licensing their content to Netflix and they needed to pull it back.